All right, good evening, family. Today is March 20th, 2023. We're looking to do a bit of post-market charting. Today we didn't really have much news. I don't believe we had any countrywide news. Let's actually go check. So again, this site that I like to use is actually very simple. Forex Factory. It's the name of it. We look here on Monday, March 20th. You see for the United States, we didn't really have any impactful news, not on a countrywide basis. Now, we did have news as far as, I don't know why my mic's not lighting up. Let's see something. Let's do that. Okay. Maybe I should have tested it first. Hmm. It's a little late for this, but this is what it looks like in I mean it's moving here, but for some reason I don't see it moving up here. Testing, testing, 1, 2, 3, testing, testing, 1, 2, 3. All right, so if we can't hear audio later, please forgive me. I did just do a quick check. Um, so getting back to what we were talking about, we seen there wasn't really any countrywide news for Monday. For Tuesday, for the US, we had existing home sales. So um, maybe in that industry, as far as real estate goes, we might see a little movement there sometime after 10 o'clock. Looking at Wednesday, now these folders are color coded. So we have red here for Wednesday, and we have this is high impact as it displays, as it pops up on the screen. So we have the Fed looking to speak on Wednesday, and anytime they speak, it generally, anytime we're in the market, we're dealing with probabilities. There's generally a higher chance at volatility, so prices swinging high or low in whichever direction based upon what the big money makes of the news that the FOMC is going to deliver on that particular day. So now that we know what we have in store for tomorrow, which is just the existing sales, let's go back to our charts. And another thing I wanted to cover today is that what you see here is a few years. This is years of trading. When you actually begin your trading journey, um, especially if I were the one to show you how I began, because when I started, I had a bunch of indicators. I started with a bunch of indicators on my chart. However, as I continued my journey, I realized that there was a more fundamental way to start. Um, and in doing so, rather than your chart looking really busy like this, it will actually, let's just call this YouTube. It'll actually look more like this. And then you'll come to understand that all you're really looking at is three candles at a time. So starting from where we're at currently, you'd just be looking at these three and you'd have a good idea of what's going to happen next. Again, everything's in probabilities, but it's really that simple. But getting back to our regularly scheduled programming, let's go back here and see what we have. I'm not even I don't even have the mood set. I do apologize. I did just get out of another meeting and just wanted to make sure I gave something this week, so that people could make some more educated decisions as far as what they do in the market this week. I still don't believe we're going to have the major change until about Wednesday around that time. Um, but just to start off this week, we had a little bit of movement, but a lot of things were inside, or uh, they would break their daily levels just to come back inside. So let's see, while we're doing this, let's get the mood set so that it can focus, or so I can focus. I really normally like to have some type of ambient music playing in the background. It just kind of it's not so much when I'm looking at all of these different data points. So we're sticking with the cues as usual. Getting some alerts set up here so that we can be notified in the event that we get a major level broken. All right, so just feel free to have these same levels marked on your chart as well. Right now, I'm looking at things from a daily time frame, and in these market conditions, I'm scalping. I'm not really looking to hold too much of anything, especially with the Fed speaking later this week. All right, so my ATR is about 625. Drop 25 cents. Do about $7 worth of levels. All right, so my call side is pretty much already covered. Let's see what we got on the put side. Mm, 50% retracement. Okay. Look and see if this, even though this is a quarterly level, see how much respect we have here on this line. See, it came up once near that area, rejected, rejected. Same here, it went beyond it quite a bit, still closed well underneath. Same here, same here. We extend this out some. So 1, 2, 3, 4, 5. We already have 6 days worth just in this time frame. So we probably went further back to look at more of the quarter. You'll probably find more and more wicks coming off of this line. So I believe it's safe to keep this as a at the very least the honorable mention because we never know, nor do we pretend to know what the market is going to do. It's just a matter of watching the candles as they form and as they move either towards or through these different levels. Uh, that lets us know, okay, we went through this high of yesterday here. Just giving a small example. This wasn't really intended to be a teaching session, but anywho, we break here. We know that if we continue to go up, as long as things continue to look nice, we could go. This could be a potential level where we take whatever profit that we gained thus far from breaking this point. Don't know if we get in right at that point, maybe a little before, depending on your investment style. That level is 306.30. So we continue to move up, and depending on the number of shares, or if you're like myself and play options, the number of contracts that you purchase, um, this level up here could be a point where you're looking to get out. But as we see just in the previous day, uh, you know, we started out here at 306.72 and we proceeded to go up through several different levels. So depending on again your own risk management or style, it'll be up to you as far as when you decide that, okay, this is the point at which I want to take my profit. So depending upon whether you're really conservative, you may only allow it to hit one of these points, two, three. Again, that's a matter of preference. Or you could attempt to take it all the way to the very end and wait until it begins to come back down to exit your trade. But again, that's all just a matter of preference. Me personally, I'm very conservative, so I don't hit massive numbers as far as percentages go. I know what my bank pays me, and I treat this as a bank account. So I'm perfectly fine with a bank account giving me 10% um, daily. That's fine for me. Some days are better than that, where I can get 20, 30, 50. You know, on that FOMC day, those could be days where you see really high numbers as far as 70, 80, and hundreds in the percentages. However, for my own trading style, I know that I don't intend to be in the market very long, so I might not even be in uh, come 2 o'clock. So if I don't see enough movement, it wouldn't surprise me if things get stuck in a bit of a range, which is actually kind of what we're doing here with these two candles being inside this one. Oh, but I digress. So back on track. Also, this past weekend, I actually held a live event to try to help people learn to trade without having to risk their own money. So I look to do that again here in the near future. If that's something that you would like to be a part of, please put it down in the comment section, and that way I can get a better idea of how to structure things. So we got 302 and then 30109 is a quarter. Ah, look at that. So we just mentioned here a psych level 300. And it's interesting that that actually shows up here as one of our weekly levels. So as far as what happened last week, I always find it interesting when some of these things that are meant to, some of these tools that are used to calculate statistical data, how they line up almost uncannily um, with previous levels like this one. How we just mentioned or at least is typing up the psychological level here. And it also happens to coincide with the weekly level here indicated in this shade of blue. I don't have to do all this. 302 right here. 30201. So what I have to really do, we could have been done here. Well, I guess the Lord had other plans for me. Taking this, what's that, 30187? Did I already mention that up here? So all this stuff here is redundant up until that 300 as a weekly. All right, so we got all these kind of stacked on each other. We got 317, we got 300, which also happens to be a weekly level as well, and another weekly level right beneath it, all like less than 50 cents from each other. And those are all pretty big levels. When you have weekly levels and monthly levels, just maximize this so that anyone watching can get these levels here. I don't know if I can maximize this just for the sake of the video. Hmm, 26, maybe. Kind of massive. I didn't want it to do the whole thing, but oh well. Feel free to pause as necessary. I'm just going to do a bit of a slow scroll so that you can get these levels here. And I have how to read them up here at the top. Again, feel free to pause this as necessary. Um, just letting you know that everything here is daily levels, and each one of these hyphens here represents the going towards the next profit taking level. And anywhere there's a near in between these hyphens, those are multiple levels stacked within less than $1 range of each other. All right, so let's begin that slow scroll. Calls is on the top line, puts are on the bottom line. There are a lot of levels in there. It's quite a few levels stacked in there. Those are relatively close also. And each of these in parentheses is, like I say, everything as in the instructions, everything were daily levels unless noted what was noted in parentheses. So 1W is weekly, M is monthly, 3M is quarterly, and 12M are yearly levels. All right, that's it. I hope this was helpful. Like, subscribe, share. Still getting used to this, but I hope you all are getting some kind of value out of it because that's the whole point of doing this. Until next time.